My name is Chris Campbell. I'm a practicing CPA, and I work with small businesses and individuals to help them pay the least amount of taxes while keeping you out of jail. So today I wanted to talk about business valuation. So I had received a call sometime last week from a client of mine, and they are exploring selling their company. And they have some meetings with the buyers, and most business folks, entrepreneurs, getting bought out is great, right? That's almost for a lot of folks the ultimate goal. So, but the question they had was, how do I know how much my company's worth? So I wanted to go through some rules of thumb so that you can quickly figure out or have an idea of what your business is worth. So if you ever find yourself in a position where you're looking to sell, or even if you're looking to buy a company, you can have an idea or ballpark of what that company is worth. So most companies are bought and sold based upon multiple. So when you hear that multiple, they're referring to a multiple of the earnings. So essentially what you would do is find out the earnings or the profits of the company over the course of a year, preferably with the most recent 12 months. And from there, you multiply that by the given multiple to come up with the dollar amount. Now, the multiple varies from industry. So what you would do is just go online, just go to Google or ChatGPT nowadays, and put in what the average sale multiple, or valuation multiple of your particular industry. So if you're in the plumbing business, just put average multiple of a plumbing business, and they'll give you a range. They'll say 4 to 6 times. So that's the multiple that you use. Now, you multiply that against the net income of the company. Now, to actually get to that number, you may hear a term called EBITDA. It's an acronym which stands for earnings before interest, depreciation, taxes, and amortization. To avoid getting too complicated with it, what you just simply need to do is, if you pull up your financial statements and just go to the bottom line, which is the net income with most folks, if you pull up your financial statements, go to the bottom and it'll say the net income. You're going to take that number, that net income number, and you're going to add back those line items that I mentioned. So if you have a line for depreciation, add that back to the net income number. If there's interest that you paid, add that back to the number. Amortization, add that back to the number. Income taxes that you might have paid, add that back to the number. So you're going to add all those things back to that bottom line net income number, and that's essentially your EBITDA. So that is your earnings number that you're going to use. Use that number and multiply that by that multiple, again, based upon your industry that you would have looked up. And that will give you a good ballpark idea of what your company is worth. Now, some of you might be in a position where, let's say you're not profitable. Usually in the startup world, you're not really profitable. So you're taking on a lot of money. You have investors, venture capital investors, where they're pumping a lot of money in to get this thing going, and you may not necessarily turn a profit. So if you use that previous formula that I spoke about, you would actually have a negative number. So that won't help you. So if you are in a situation where you have a negative earnings number, then you would just go to the top line, which is the gross revenue. Take the total revenue that you generated over the course of the last 12 months, and that will also have a multiple. So again, that will vary on industry as well. You're going to go and find that multiple, the gross revenue multiple valuation for your particular industry, and you would just multiply the revenues. Usually with startup companies, software companies, those are the companies that you may need to do that. So you're either going to use a multiple of your earnings or use a multiple of your revenue based upon if you're profitable or not in your industry. So that's all for now. If you have any questions about this particular topic or any other tax or accounting topic, feel free to reach out. I'm happy to help. That's all for now. See you in the next one.